What's going on, everyone? It's your boy Nathan here with Win with Nathan here at the Lender. Guys, I've got another victory to share, but also how it started off rocky. It's not how you start, it's how you end. But guys, this video, I'm going to talk about how I, Nathan, was just like most loan officers and brokers out there, and I was a loan officer. I was not an advisor. And guys, you really want to work with an advisor, not just a loan officer. A loan officer is someone who just chases rate, chases deal, wants to originate. But guys, if you're an investor or business owner, or really even buying a primary, especially a first-time home buyer, you want an advisor. You want someone that's going to help you, right? Who help give you strategy, all that stuff. A loan officer just chases a deal, chases a rate. So let's talk about how I messed up. Let's talk about how I was a loan officer. Guys, customer called in, wanted some help. They said, hey, we're working with this other company, right? I know the company. I didn't know the loan officer, but I knew the company. Sent me a term sheet. I see a term sheet. I start pricing it out. My eyes get big. I'm like, all right, I can beat this, right? They were at 25 or 75% cash out, or 70%. I'm at 75, right? Now, basically, here's where I messed up. I chased the deal, right? And I had their term sheet, and they had this at a 3-year prepay, all this stuff. And I'm like, boom, I can do 75. They can do 70. I can do the same prepay. My rate is the same at 25 or 75% LTV as theirs at 70, right? And my comp is the same, the broker paid comp, the origination. Here's where I messed up. Got the deal, won the deal. Excited, right? Well, sure enough, I didn't do my usual. Usually I do all my due diligence. I know what to do starting, but it's very rare that I talk to people after they talk to someone else and get a term sheet. Usually I'm the person who gives all the advice, and then they try to shop around and beat me. But this time it was the other way around. Lo and behold, they're in a state that doesn't allow prepayment penalties, right? So I went from a rate of, I think it was 7.125, right? I went from 7.125 3-year prepay all the way up to 7.875 no prepay. Huge difference. They were upset. I understood it. I apologized. I told them, look, right here on their loan estimate, because they did a CD, right? They did a loan estimate. I said, look, here's where I messed up. They had a 3-year prepay on here. I copied that. I just wanted to beat them. My origination's the same as theirs, but if you look down here in section N, they hit all their broker fees, right? So I messed up because I saw rate, I saw a deal, I saw let's get it, right? Like most loan officers. So lo and behold, I said, look, I understand if you don't want to use me, I messed up, but I do want you to go back to the other company and ask them why they're allowing a 3-year prepay when the state says it can't. So they went back to that person. That person made the same mistake. So then coming back to us, we're neck and neck, right? They chose to go with me because I sat there and I told them I messed up. I admitted my faults, and I said, let's work this out. So we're working this deal now. And I asked them, I said, hey, why haven't you refinanced sooner? You got a lot of equity, blah, blah, blah. Just having a conversation with them, right? They're fellow investors. They said they're worried about the appraisal. They said they tried this a couple months ago. And I said, okay, what's wrong with the appraisal? Well, hearing them out, they said it's because it's rural. We don't have a problem with rural. Well, it's because we're a small town. We don't have a problem with small town. You can still get comps. It's all about the appraisal. They said we have never gotten an appraisal done since we purchased it, right? Years ago. And then they also had an issue where they don't have a primary home anymore because they moved in with their one of their moms to take care of them. They're elderly. She's even older, right? And then the other lender wouldn't take that they have a mobile home that they rent out because they say it's not valid. So all the things that I can overcome, we overcame, and we kept going. And it gets funny, guys. So because of the appraisal issues, I said, hey, we're not going to lock the rate, right? We want to wait until we see about the appraisal because you're concerned about how long it might take. Let's wait. And they said that's what they wanted to do. Sure enough, they got the payment. As soon as the payment, the Fast app is who we use, AMC Group, sent an email. They started blowing up the AMC Group because they were so concerned about the appraisal. They wanted him now. They wanted this. Our appraiser said it would be 3 weeks, right? The one that the AMC Group got. But this customer kept calling them and wanting it sooner. So he came within 2 days, but he didn't get the report for a while, and they started freaking out. And I said, guys, it doesn't make sense. Why did you call the AMC Group? Why'd you do this? What's going on? And they said, We have never gotten an appraisal back when we tried to refinance. We have never made it that far. Every mortgage company has told us they've failed. And I said, how is that possible? So I asked the question. I said, where did they fail? And they basically said they failed at the income, right? It was really hard to get short-term rental income. And I'm sitting here, I know my product, I know what we can do. I said, look, why do they need short-term rental income? Right? We're refinancing cash out. I'm using your 12-month history. And they said, every other lender has said we needed that. I said, I don't. I said, so let me go ahead and do this. Hey, appraiser, I don't need a 1007 rent survey. I don't need short-term rent. Can you get me the appraisal with the comps? They said, yeah, sure. They said they weren't going to be able to do short-term rent. They could do long-term rent, but it wouldn't debt service. Okay, you could do that. I don't care because I'm going to use the short-term rent that they have for 12 months. We got the appraisal in. I'm telling you, these customers were excited. They've never gotten that far with an appraisal. They've never gotten an appraisal actually back. They were so excited. Downside. Because of all the warnings they gave me, we didn't lock the loan. They wanted to float it. We had a conversation. Rates went up significantly over the last 14 days. So I had a conversation with him. I said, guys, look, we didn't have the appraisal in. We didn't lock the loan because you guys were really concerned that the appraisal would take time. You didn't want to pay for extensions on that. When we can lock the rate, now we're at a significantly higher interest rate. And I'm talking 85%, we are at 8.5%, right? We were at 8.5%, no points, right? No points. And they weren't happy. And I just said, guys, look, I started off bad with this deal. I started being a loan officer. Let me prove to you why I'm different than those loan officers, and let's look at this. Let's talk this out. How much business debt do you have? How much this and that? How much here? Right? Their LLC, their business has a lot of debt. They've repaired the HVAC, 10,000, I think it was. They put more money into the floors. They put money into their other rental and all this stuff. So here's what they were going to use the cash out is they were going to reinvest in their in business by paying off their business debt to free up cash flow. So hear me out here. Current mortgage, I think, was $1,000. With the cash out refi and the higher interest rate, their mortgage went up to $1,700. But what they were going to save by paying it off, they were going to save a cash flow of basically $2,700, I think it was. So they're saving monthly by paying off the high business loans they have for their LLC, the credit cards, the HVAC. They did a loan to fix the HVAC through a company, and it's a high interest rate, right? 13, 14%. Business credit card was at, 20%. Guys, I sat there. I literally told them I needed to call them back because to do what I do, to be different, I needed a piece of paper. And sure enough, I didn't have a pen or piece of paper around in here, right? I told them I needed to go, but also I'm a little scared because I recently, saw a snake by my foot in here. But that's a different story. So I got a piece of paper, I got a pen, and I talked to them. I said, guys, at this interest rate, here's your payment. It's saving you this month, this much, right? But we did 70% LTV. I said, let's look at this. If I can go up to 75% and give you an extra 5%, which would cover their buy down, right? Which I told them not to do, but it covers all their business debt. And the interest rate went up only slightly. It went up an extra $200 a month. So they got an extra 5% in their pockets. And the reason they wanted it is this. They've been living paycheck to paycheck with these rentals. They want a reserve account. We can put a savings account for their business of around $14,000, right? $14,000. That made them excited. And I told them, let's not talk rate. Let's just talk everything else. So at the very end, after I said, if we take 14 grand, put it in a savings account, it's in 1 year, 12 months time, it's going to take an extra, $1,800 in interest. So out of that savings, you now have $12,000, but each month you're going to save around $1,900 pure profit after paying everything for your business. After 12 months, you're going to have a goose egg, a reserve account of X amount. They couldn't believe it. They said that's a salary in their town. So it made sense. Guys, they're taking a high interest rate and they're not even mad anymore because I showed the difference between an advisor and a loan officer. I started off this deal with a mistake. I make mistakes, right? I know most people don't think I do, but I did. That's a joke, by the way. I usually joke and say I don't make mistakes. You'll never find it. That's why I don't have whiteout. I just throw away the papers I make mistakes on. That's a joke. No one gets it ever. But guys, being an advisor is hearing your customer, hearing the need, hearing their issues, hearing why they're doing this, and finding out a reason. Most loan officers are going to teach you it's rate, right? Cost. It's not. It's all about the end result. The end result was to take a high interest rate. We're treating it as a bridge loan. If they're going to refinance in a year or 2 years, they're okay with it because of how much money they're going to save, what it's going to do to pay off for their business, how it's going to boost them. It's also going to boost her credit because she's had to take out unsecured business debt in her personal name, and we're going to pay all that off. Guys, what matters is listening to someone who is an advisor, listening to someone who hears your goals and gets there. If you go with the lowest rate, lowest cost, you're going to get that, right? You're going to get a loan officer. If you want to talk to an advisor, talk to an advisor. Talk to someone who will listen, who will admit when they make a mistake, like this boneheaded mistake I made that really made them mad. But at the end, it was a good thing. So guys, the lesson for this is be an advisor, talk, listen, take notes, see what their goal is. Don't just see a rate term and try to beat it. See what the issue is and what the goal is, and be the best loan advisor you can be. Guys, if you have any questions, call me. It's your boy Nathan here at Win with Nathan at The Lender.